We're covering Gary Glover's weekly report, which has a great introduction for this week's recording. Gary said, although the Middle East situation might have the markets on edge earlier this week, there have been some very strong technical signs last week, as we saw some strong buying and a strong finish in US equities late in the week, and that generated a follow-through day, which is often an early signal before a larger rally. It can be those pivot points in the markets. Now, provided we can hold up in the coming days, there might yet to be another seasonal or common early October low that's coming out of the markets, domestically and internationally. With that lead in of paraphrasing your own report, Gary, which indices should we start looking at today?
Yes, every new sort of bull market or bull phase starts with a follow-through day, but not every follow-through day is the start. Yeah. So we can get a few false starts in there, but the thing we know is that we always see one of these. You generally in the first sort of 4 to 7 days off the load, and again, most of the sort of most of the best traders that I follow, particularly in the States and stuff, there, if they saw a follow-through day, that was going to be a follow-through day, they would have been at least buying something. They basically would be looking at the sort of strongest stocks, and they'd be at least having some positions on there. But great. Bill O'Neill basically said, you should be buying something on a follow-through day. So that's the good over there. I mean, the great over there last night too, Chris, was obviously we had that follow-through day on Friday, and we had the events of Israel over the weekend, which is pretty negative. Obviously, that caused the futures to be down 200 instead of being up 50 for us. We only ended up at 15 yesterday. But the US market has sort of started weak and then finished strong here. So that's a pretty good sign here in the face of what's pretty negative news there. So I view the price action as pretty, like when you use sort of early October is a seasonal low here, sort of that sort of July to October is the choppy window. Oftentimes we get an end of year rally sort of starting from this early October timing here. So in the face of, what's pretty bad news, the market's done very well here, and that's very encouraging the way I look at it. So, it's just kind of taking that bad news sort of very, very well here so far.
Okay, so if we look through on the charts to see what they're reflecting, you've talked about the follow-through day, which generally that's a daily chart, and you've got the weekly charts in your reports as per normal. We've got this pulling down, you've got A, B, C, and then the critical part here is that you noted the end of the week kind of closed strongly for the US. So is there anything more to take out of this chart, or just that's what you were talking about earlier?
Yeah, I guess last week they were talking about this is just a classic ABC sort of three-wave correction, which is the most common type of pullback correction in the market. The thing I do like here is that apart from the follow-through day, having that big day up and big volume, which is a good sign, we have come in at critical. We've sort of come in at that previous high there as well, Chris, on the way down there. So a few touches along there, but most recently, that's just a level of sort of support for me. So we've actually bounced off that quite nicely. So yeah, we just have we have the really sort of common ABC pullback, which is normal, and we've sort of we found support at a bit of a key level here, and we've had some pretty good up days here in the face of bad news. So that's pretty positive as well. So I think this looks really encouraging here. If you're a bit light on at the moment, there, I'd probably be starting to look to adding some positions on here actually. So looks pretty robust to me.
Okay, so we thought that's the NASDAQ chart we were looking at. The S&P500 doesn't quite could have the ABC, maybe a little bit different. But October low, we're seeing these lower wicks sort of coming down and probing, not quite getting back to the previous high. So would that be that spacing that you talk about?
Yes, I mean, look, I was looking at that 4,200 zone. That's the old high there. So we're just going to, sometimes maybe, really strong trends will leave spacing and stuff there. But if we come back and sit on top of that, that's still pretty encouraging. So, this hasn't been as strong as other sort of third year or pre-election years, but the cycle's still pretty positive here. What I do like is if we look at our sort of lows there, from the October low, it has sort of come back and hit that sort of channel line and bounce from there. And potentially this is, again, another little ABC pullback, come back and hit the channel line there. What we did see was really good volume on the Friday off that low as well. So again, last night some follow through there, and again, in face of some pretty bad news in the region. So looks pretty good here. So I think any sort of any weakness, any consolidation here, it is a good sign here. So I think, I really like what I'm seeing here. I just can't stress there when you sort of get pretty bad news and the market holds tight on that bad news. That's a really good sign there. So it kind of gives you an under. So sometimes sort of you in a market there where like sometimes in a really strong market, stocks can have bad news, and then they sort of might gap down, but then they get bought up. You sort of see that sort of strength there, and you go, "Wow, okay, that was pretty bad news," but it was a bit of a market, a chance to sort of buy it there. Whereas in a really weak market, bad news and the stock just can get hammered as well, and then you go, "Wow, it's treacherous." So it's a market that's sort of on edge, and so it gives you a sort of reflection as to how the strength or weakness of the market there. So considering the bad news the last couple of days here, market's held up pretty well. So that's actually, just take that as a pretty good sign there. So a bit more credence than just having a single day up here. It's actually in the face of pretty bad news. That's held on really well off what is a critical level for the market there as well. So and critical timing. So I'm very encouraged here where I'm sitting.
That would flow through for the Aussie market in a similar way, would it?
Yeah, the Aussie market's a bit choppier here. You look at that sort of trend line there, we've probably got a couple of touches there, and that's probably a bit negative, breaking that line. So that's not so good. But the question you got to ask yourself here, Chris, is this, is this a sort of trending market, or is this a sideways orientated market? And this is clearly just a choppy sideways orientated market. And you just need to look at CBA, look at CSL, look at Coles, look at a lot of stocks, and they are just in this big sideways sort of range bound market here. And what they're often doing is going to a margin new high, margin new low, or going up just under the high or just under the low. So really choppy range bound market here. So this just might be here just a little sideways orientated, little ABC as well, just going to a margin new low after that sort of that high in early 2023. So it's been a largely sort of choppy sideways orientated move here. So this might be just another little sideways chop, a little bit of ABC, and then maybe we can rally back up again into that, up into the higher end of this range again. So but so that trend line is negative, but in context of the sort of again, if you look at the 40s and the 70s there, those markets just went up and down, quite volatile, but didn't go anywhere over the long term. But just in the short term, they're pretty sharp up and down moves. So it makes it hard to trade, a bit hard in your mouth at times. But if you understand that we are in this choppy sideways orientated setup, and we could stay there for a while, then you can build a thesis around that, trade around that. So that's what I think is occurring here.
Okay. Well, as we move to the trading shares, we'll talk about the gold companies in a second, because you've been on the right side of gold, and that's performed really well for you. And there's a couple of blue chips. First off in the charts, Jumbo Interactive. So we know from an inflationary perspective, cost of living crisis, sort of semi-recessionary in the sense that people are not making those big ticket item purchases. Gambling can be things like alcohol, where demand can actually increase as a small win or a small luxury for consumers. Is that still an overarching sort of macro thing to look at with Jumbo?
Yeah, it's a high margin business there too, Chris, as well. And I think actually if I'm not mistaken, the biggest lottery in the US will be on this week here. It's something like just under $2 billion or something from memory. It hasn't gone off for like 6 weeks or something. It's a monster. So you get with Jumbos on, obviously they get access to Australia and some of the overseas ones there. So it's a good, clean business, simple business, high margin. Yeah, I think you're right. I think it's recessionary sort of proof sort of stock here. I mean, technically, it has sort of broken out of that type sort of consolidation pattern, and it did sort of go for a bit of a pop, come back, hit the range, and go to a new high again. And since then, we've sort of been at a bit of an overlapping grind, sort of lower here. So to me, this is sort of like, going back to retest that previous high, then like an overlapping pullback here. It's like a little, like a sort of cup and handle sort of setup here. So nice sort of tight consolidation there. Hasn't retreated too much into the range. And we're going to look, so I really like this look of this actually. It's just, it just fits into the current economic sort of landscape there. It has showed relative strength as well. That's a sort of, that's that sort of cup and handle pattern too. It's just very prevalent in the stronger sort of stocks as well. So, the thing about these sort of, when you see the corrections in market, Chris, as well, and the market pulls back and has a pretty deep pullback, we're going to be trying to look for the strongest stocks, the stocks that have sort of held up the best. Jumbo definitely fits into that category here. The fundamentals, technicals, they're actually sort of supportive of this stock as well. So this does look pretty good.
Okay, so Jumbo's looking like a pretty good one from a bit of a macro perspective. The cup and handle's a phenomenal one. You talk about William O'Neill earlier. It's one of his great patterns that he trades, and you've traded it quite successfully as well. If we look at the blue chips, earlier you mentioned, and you've said this for a few weeks, that we just have this choppy situation happening with the blue chips.
Yeah.
Range-bound movement, you just mentioned it on the Aussie and the indices. You've got Coles Group in here for this week's report in the chart. Is there an opportunity here, or is this sort of you using this to show the nature?
That little zigzag you just did there with the cursor. I don't know when you did that. What came to mind was the 1970s. So we've highlighted that 70s. So the whole decade basically did that, up and down, up and down, up and down, just a massive range there. And look at these stocks here. I mean, that's just sort of range bound there. So anything sort of what under 16, sort of 1550 up to 19 there has sort of been really the range there. So I really like this here. I think it's on about 18 times Coles. The yield might be just under 4.5. And compare that with Woolies at the moment, which is on 28 times. The yield might be 1.7 or maybe even less. So I think Woolworths is a better business, but is it 10 points better business on an earnings basis? I don't think so. So I think there's an opportunity here with Coles. I think it is down the bottom of the range, fits the whole criteria of the market. It's a value share, so it's got, the PE is quite low in terms of the sector. The yield's nice and, it's a good value, sort of fully franked dividend yield. Just fits the criteria as to sort of how these markets sort of trade here. So to me, sort of around 1550 here, this is probably a good add here to me. Just makes great sense.
Well, before we get to the goals, you've got two other ones. We've touched on a few times before. You did a lot of research. Oh, sorry, I'm jumping the gun. We still have CSL to look at, which is also range bound.
Just wanted to highlight that, that's the very nature of this market here, Chris. That's it just typifies what we're in. So just kind of understanding that and accepting that. So at the moment, we do trade a lot of leading stocks, and we're looking at momentum stocks as well. But if you, I know at the moment, like a lot of the US guys, Minervini and Caruso and Oliver Cal, those guys, they're finding some of those ECP, some of those trading patterns there, momentum stocks aren't really having the big follow through. Yeah, they're sort of popping and dropping, so it's just not having that, So sometimes you got to adjust your sort of trading just to the climate here. So maybe Coles is not showing relative strength there, so maybe it's not going to be. Oftentimes you're looking for the stronger stocks to sort of come out of the sort of momentum here, but if momentum's not really working, we need to basically maybe have a mix there. So I'm sort of trying to do a little bit of momentum and a little bit of the value as well in terms of these ranges here as well. So got to mix up your little strategy there. Just if things aren't working there, I know if you follow Chris Karcher and particularly Gil Morales, who's very vocal on Twitter, he's he's always talking about having to switch up your strategy and to alter your your trading to the conditions. So I think this is definitely one sort of one to look at. That's why I like the sort of having that momentum based sort of strategy there with something like a false break strategy. It sort of gives you a little bit of both there. So you can sort of you can have a foot in both camps there, depending on which one's working.
Well, that's they're definitely strategies you covered in great detail and had a lot of success. So common regular followers will know them, and you do cover them weekly and Tuesdays and Fridays. The other sector that you've covered a lot, especially during the COVID lows. So we've got the weekly chart here. We can see this massive drop off. That's obviously COVID. You've covered the travel companies in detail, looking at when they raised and how much dilution there's been. But this chart's looking quite complicated with the red and the blues.
Yeah.
Not what Fibonacci retracements here from the low to the high. Is that the blue line?
It's funny if you have, we had probably big wins in corporate travel and Flight Centre early in the year, sort of coming out of those October lows there. Just really like that sort of sector there, and it was a big winner. So as you know, we're biased human beings, so we tend to go back to where we had success in the past. But saying that there, I just noticed that we've had a pretty deep retracement there, come back sort of 3/4 of the range there for corporate travel, which is fairly large consolidation there. I wasn't expecting it to come back this much. Has broken that trend line, but that trend line's only 2 touches. And this is again, stressing this is a sideways orientated sort of market here. So just think this is definitely one to look at there from a value point of view and a growth perspective there. Corporate travel hasn't had to raise any equities as well. So do like the fundamentals there, just looking for reasons to sort of find a technical support there. So there is a shorter 14-week cycle on this. I haven't sort of highlighted that on the chart there, but sort of from the low, there's a nice 14-week cycle which culminated this week as well. So that tells me if I was going to look at a trade here, I'd be using this low as my stop here. So, but I haven't put a trade on here. It's just one that because look at that volume too. Look at the last 4 or 5 weeks. It's hardly aggressive selling. It's just pulled back on pretty lighter sort of stuff here. So that's that's sort of typical in a choppy environment too to see light sort of selling here. So just one stock that I think from a fundamental perspective, I think this is really got legs longer term. Just trying to find a sort of a good entry there at the moment. But I just think this one's pretty close there. Just if this one sort of turns this week, we get a nice bullish reversal. This is probably one that I definitely would look at and follow there. Probably like to see it get back above that trend line. See like some bullish price action. But I was sort of encouraged by where that's come back to.
Well, the other travel company is Flight Centre, and you've still got the Fibonacci movements here. So I just highlight the 0 is on the high, the recent high, coming from the low, which is at the 100. And what you're looking at is the amount that it retraces of this range from the 0. And we're coming back here, which is you've highlighted here in this range, which is half of that range.
Yeah, that's right. So I mean, basically, you got a sequence of sort of high lows in there, still in place. We've come back to the 50% of the range, which is encouraging as well. Got a nice reversal there last week. A bit of volume sort of come in as well, and we've also sort of come back to where that last sort of pullback sort of started as well. That's often a sort of classic sign to come back to where the last rally started there. So again, I do like this here. So had a pretty decent pullback after getting up to 23.50. So this is another one there. I think it's sort of a bit of a key zone here. So any reversal here, any positive signs there, probably worth sort of following here. So look, I'm not sure what the Middle East drama does to travel there. Maybe it makes it slightly less appealing, but people will probably just travel to safer areas of the globe. I still think, after the COVID there, it'll still, like all the air flights, all the airport traffic and stuff is still really, still very popular to be traveling. Everyone's still wanting to,
It's passport.
Yeah, get out and about there after being locked up for 3 years. So, so I still think there's going to be a pretty strong demand there for air travel and for just traveling internationally.
Well, now we'll move to the golds because you've talked about golds for a couple of weeks. from the context of your studies, and we'll put a link into the notes here, of your 40s and 70s inflation, the sectors that did well, and the part that you'd mentioned a few weeks ago is that blueprint we've been following that right now in 2023, but the only part that was lagging with the gold sectors, or the gold stocks, and they hadn't quite turned the corner, and you were building up nice positions in them. You consistently surfacing the relative leaders and trying to find where the best trades were. The unfortunate events of the weekend could actually be the part that brings gold into its rally. If we focus on Resolute, you've got on a chart here, that's the first one of the mix. Why are you looking at Resolute right now?
Yeah, it's funny you say that, Chris. I mean, if it was, most people are probably thinking this is just a short-term catalyst, maybe for gold, and that's all it is. Based on all the cycles of research I do, is that gold's the only sort of commodity there that hasn't had a rip-roaring rally. When you look at all the other commodities, and just basically how history has sort of has developed. They just historically, they're precious metals and energy and value, obviously the pretty strong sectors. I don't know how many times I've said that there, but gold's probably been the underperformer here. Always felt like there's a big rally in gold here, so this might be like a short-term catalyst there, but I have a strong feeling, Chris, that this catalyst there, this Israel catalyst there for gold there, this gold could do something like uranium, could have the type of move that we've just seen for uranium and uranium stocks there. I just really do think a big gold, big rally in gold is possibility there. The big technical picture on the spot gold chart as well is it's all got a few touches of the high, but it's pulling back under the high, and it's sort of probably getting shallower and shallower as well. So that's like a big sort of consolidation, cup and handle, whatever you want to BCP, whatever you want to call on spot gold there. But that's kind of encouraging there. The stocks, looking through some of the golds, some of them have held up really well. Like Ramelius has held up fantastically well. I think WGX held up well. RSG has held up really well. Some of them have pulled back. The ones that pulled back there, so I think Newcrest has pulled back, Perseus, Evolution, Northern Star, they've all just come back and actually they made a marginally low. So a lot of them have just come back and just kind of, this might just be the washout here, just to shake out the week, let's say that with the weekend ends here for gold, but this might just be the final little shakeout before we see something big here. So I just like what I see here with, what's going on here. Most people are going to think this is going to be a short-term catalyst, but I think this might just be the catalyst there, which moves gold here. I'm not going to be surprised if I see a rally like we've seen in uranium stocks here from gold stocks here. Sort of definitely got the potential to move big, and so historically it's moved pretty big in inflationary periods of the past. It just hasn't worked out this time for some reason. But maybe it's just going to be last man standing here. Maybe it's maybe it will move big like energy and uranium and some of the other sort of metals there. So, but pretty encouraged there, the price action there, and sort of it's hard. Sometimes when they wash out like this, it's sort of I've been trying to build a few more positions, but it's moving fast yesterday. So like, well, do I chase it here? Do I sit back here? Maybe I'll get a little inside day. Showing real strength here. It's amazing, the strength there. So just it may not give you a lot of chance to get a good entry here. So it's I might have to build a position slowly or something. But I really like RSG. I mean, the thing I like about that was that big volume on that first leg up. Pulled back here. The whole thing's tightened up here. While gold price was sort of weakening off here, the whole thing just sat tight. It's got pretty high institutional ownership, RSG as well. So I think if this gets going again, mate, it could run again pretty hard here. This is one that I really like here technically.
So that's Resolute. Just quickly on Ramelius. I'm liking this chart here. You've talked about cup and handles. You've talked about sort of ideally the cup and handle happens after a rally, 20%, but this is sort of that formation where it's sort of come up and then it's pulled back.
Yes.
Like you were saying, sitting back under the highs, it did a bit of that. It compressed, coiled up tight. I'm sorry, the computer's not responding right now with the highlight. But tight coils.
Left a bit of spacing as well, so mate, it's done everything right here. Yeah.
Low volume.
Yeah.
And then it broke out. And
why haven't I got a bigger position on Chris? That's the $1 million question.
Well, hindsight definitely, but this is a chart that you've been looking at for a few weeks now and consistently pointing out all of these aspects of it. So this one's already started to run, and we've got the weekly chart here. If we have a look at Northern Star, it's also the weekly chart.
So I think that on that Ramelius, I think I was targeting around maybe 169 or something like that. I've actually moved my target higher just because that looks really strong here. And I'll be surprised if it doesn't get up to at least 180. That it might even go higher than that. But I think, I can't see how it's not going to trade up there at this stage. I don't, I could be wrong, but that price action there is strong, and gold's breaking up here. It's, other stocks are starting to move here. This one's been the leader. Yeah, it just looks strong.
The right one.
Yeah, it's hard. It'd be hard to buy it here now because you don't know where you pick your stop in. Your risk reward's probably not there, but this is pretty strong here. Maybe it goes to 180. Maybe it'll have a little tight pause, and then we can get a reset again. But that is looking strong.
But Ethan, you've also got Northern Star, which is, as you said, they've been selling down, but it's been sitting back on its just undercut its lows.
Yeah.
And quite possibly reversed. Is this, it's a larger one. Is this a trading opportunity, or you're keeping reference point on this to understand how the whole sector's moving?
Yes, I've got a few. Obviously, I've got a few different on gold here, but I was hoping to add here. I just wasn't expecting it to it gapped up big on Monday, so it didn't give me a chance to get set here. Everything was a little bit stronger than I'd hoped for. So yeah, look, probably I still really like. I just think we've flushed. I think we just sort of this. To me, it looks like a bit of a flush here. A little spring, or false break here, whatever we want to call it. There, I think it's just flushed out. The sellers here. We just reversed at a key sort of critical, kind of region as well. So, yeah, and it's not going to surprise me if this is a big rally, Chris, as well. I know sometimes gold's let us down a few times. I've had a couple of winners on gold and a couple of losers in the last 2 years with this one. So I know it can let you down, but this is just looking ominous to me.
And Evolution EVS, this is it's come off the October lows, rallied, pulled back towards the March low. We know what's happened with the markets then. Broke out, pushed new highs, but this is the part that's really interesting, is that it's just consolidated, tightened up.
Yeah.
And as you were saying, sort of that little washout there, those last moving to weak, getting rid of the weak hairs and flushing them out in this movement.
Probably looks stronger than actually Northern Star and Perseus and some of the other stocks there, because they've sort of come back a bit deeper, whereas Evolution is actually sort of more on that sort of tight, sort of sideways orientation as well. So that's a real sort of tight consolidation there. Held up pretty well on the range as well. A little false break, just again another little flush, just flushing out the sellers there. So, that looks really really positive there. So, look at any weakness we sort of see here, maybe late in the week or something. I mean, it's been pretty robust the last few days. Gold, I don't know if it's going to give us any chances to any pullbacks here, but any weakness in here, I think I'll be looking at this one particular as well. EVN and RSG probably haven't got away yet. But yeah, maybe we get a little pullback there, but maybe we don't. We're just making it hard here because it's already popped up out of the range. So whether to me, I'm a big risk reward sort of guy. It's got to meet certain criteria for me. So it's a little risky and out sort of popped. But yeah, if I saw them sort of have a little consolidation or a little bit of a pullback there, I do like this. I just feel like we've everything all the big moves from the inflationary periods of the past have all occurred except for gold. So I'll just leave it as that.
Well, we'll put a link to that video, the 40s and 70s, in the notes so people can go back and have a look and study that. And then also on the right-hand side, we'll have the playlists where you've consistently been talking about the history of what's been happening with the inflationary cycles and the importance of following that blueprint, which has been a great blueprint for the last few years. Any wise words to leave us with after this report, Gary?
Oh, no, look, I think it's, the market has showed really good strength here in the face of some negative news there. And so probably people a bit nervous about markets here. I really like what I'm seeing here. Actually, I'm very encouraged by the overall market. So although we've underperformed in terms of other third years and pre-election years, normally sort of October through to December is normally a positive period from a seasonal point of view. So I'm encouraged by that aspect.
Well, with those insights, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
We mentioned the playlist will be on the right-hand side. Details for the 40s and 70s report in the notes, and then Gary's Twitter handle is over there on the left, or his X handle, as we should say.